thank everybody who's joined us today for the Ask Me Anything. We are hosting this event as part of Innovate Pasadena's virtual event series this year for 2021. So every couple of weeks, we do an Ask Me Anything from an innovator in the community who can talk to you and answer any questions you have on various innovation topics. So today, our Ask Me Anything guest is Minnie Ingersoll. And Minnie is a partner at 10110, and she's also the host of the LA Venture podcast. So you should definitely check that out. Maybe she'll share a link to that when we're done. Before 10110, Minnie was also the COO and co-founder of Shift.com, an online marketplace for used cars. And before that, Minnie started out as an early product manager at Google. So Minnie recently moved back to Pasadena after, I think, over 20 years in the Bay Area. Is that correct?
Mm-hmm.
Yeah. And so she's here with us today to answer all your questions about what investors are looking for now, some of the latest funding trends, and what to expect in the near future.
Great. Thanks, Beth.
And Minnie, thanks so much for joining us.
Yeah, thanks for having me. This is great. As you said, I'm fairly recently back in Pasadena, but this is where I grew up. And so I'm actually back in the house that I grew up in. And my dad's a professor at Caltech, so that's my background today. I thought I'd start with just a couple of thoughts and then, jump into questions. And let's see, I guess my first thought is that it's a great time to be an entrepreneur right now. And so kind of can't emphasize that enough in a variety of different reasons for that. I think it used to be that it would be risky to be an entrepreneur. It might look bad on your resume if it failed. If you failed, you didn't get paid anything. All of those things have changed. You referenced that I host this podcast, and I always ask my guests, would you recommend entrepreneurship to your child? And the answer is always yes. And I had a guest, I had Mark Suster on the podcast, and he said, well, in the grand scheme of things, VC and venture-backed businesses are really just a tiny asset class and not all that important. But really, when you look at publicly listed, maybe he didn't say not important, just a tiny part of an asset class. But when you look at publicly listed companies right now, Scott Cooper at Andreessen Horowitz likes to make this point that a third of all employment is coming from venture-backed businesses. 2/3 of the market capitalization and 85% of the R&D. So I was trying to have some numbers just to sort of show the impact of venture today. And it's, definitely an exciting time. And interestingly, COVID hasn't changed that. And so, we're in the midst of a pandemic, and there are interesting things going on in venture that are sort of related to COVID and unrelated to COVID. And maybe one of the more interesting things, there are many interesting things, but one that's a big trend that I think is going to change a lot of things is SPACs. And so you alluded to Shift, which is the company that I started, in fact, when I was on maternity leave from Google. But we recently went public via a SPAC, and it's going to be a huge trend. It is a huge trend that is actually even making it more attractive, I think, to be an early stage entrepreneur, because there's more options for exits. And I tried to look up a few numbers that I could share because I think they're interesting around both SPACs as well as just sort of early stage funding right now. Let's see, sticking with SPACs, I'll just say in 2019, my numbers are approximate here because different sources had different numbers, but in 2019, there were 225 IPOs total in the US. And in 2020, there were 225 SPAC IPOs. So this phenomenon of having SPACs, which is a special purpose acquisition company or corporation, is brand new, and it's huge, and it's changing a lot of the view for a lot of our later stage portfolio companies that are in our 10110 portfolio. And then I pulled in interesting numbers that I thought were interesting about early stage investing. So as I said, 10110, we do seed stage investing as opposed to pre-seed. And I think that that's a real change. When Shift raised our seed round of funding in 2013, so not that long ago, generally the expectation was that you would raise a seed round and then you would raise your Series A. And now almost all the companies that we're seeing are really doing 2 seed rounds or 2 rounds before their Series A. And the Wing VC pulled together some interesting numbers that I wrote down because I thought they were useful to understand. So Wing VC just looked at companies raising their Series A from what they call, I forget, like the top 20 Sandhill Road sort of traditional big VC funds. And the typical company raising their Series A had raised about 5.5 million before getting to their Series A. And the average Series A was a 15 million Series A with a 60 million post-money valuation. And that's just a huge change from when I was raising in 2010. This Series A was a third of that. It was about a $5 million Series A, and people had raised 1.5 million before that. So I'm talking a lot about money because I think that, it affects, it affects what we're able to build now and kind of what we're seeing in the market. I think it's fairly interesting. And then, other things, there's certainly other industries, different industries are exciting. And, as you alluded to, I spent almost 2 decades in the Bay Area. I was an active angel investor, and a lot of my friends had become VCs or entrepreneurs. And so it's interesting to see what's going on in LA. I see there's an interesting chat that says the numbers are much higher than what I'd seen previously. So they are high, and some of that is because, so I'm interrupting myself because I'm looking at the chat here, but the numbers are high because Wing VC only looked at people who are raising their Series A from what they consider the top 20 Series A investors. And so that certainly, I think, is pulling the numbers higher. But if you go to Wing VC, it's a story that got a lot of coverage. So you can find it, I think Forbes wrote a feature article about how the numbers are getting higher. But that's why that's going on. But anyways, I think a lot about LA. And as you alluded to, I do this podcast where I ask, all my guests are LA VCs. And so, I feel like a lot of them want to talk about how great LA is. And, you don't get that as much in the Bay Area, right? So you don't have as many people proud to be investing in the Bay Area community. And it's great to see it in LA. And I think that, or in Southern California. And I think we have all the components here, and also an opportunity to really, intentionally build the Southern California brand of, build the ecosystem we want to see, as opposed to just sort of following the Bay Area's footsteps. So anyways, long-winded way of saying, I'm excited to be back in Pasadena for sure, and excited to take any questions. And Beth, did we agree I'm supposed to read these questions, or would you like to read
Sure,
them?
we have a few questions that attendees submitted beforehand, so I'll share these with you right now. And here's the first.
Yeah, no, this is a great question. I've built and launched startups, and now I want to get into VC. So there is a line that says, if you ask 20 VCs how they got into VC, you will get 20 different answers. And I think that is completely true. There's a variety of different paths to doing this. Probably the easiest is finding $1 million somewhere and starting to invest. Now, I say that flippantly, but I do see a lot of people who, they're aligned with some, billionaire who can actually bankroll their ability to do investing. And a lot of becoming an early stage VC is actually just being able to have the capital to invest. But that's a sort of flippant answer. And I see all sorts of different paths, but depending on who you are, playing to your own strengths. So I see a lot of people who are, let's say, getting their, master's degree, their MBA, they're early in their careers. And those people have amazing deal flow a lot of times because they're really able to and interested in going to the happy hours where the entrepreneurs are networking and they're sort of in the flow of deals, and then, you know, sharing those deals and building relationships with VCs by sending deals that they might be interested in, and kind of catching sort of VC's attention by, even if you're not angel investing, you are identifying great companies and sort of just inserting yourself into the ecosystem, has been something that I've seen work really well. I mean, the main answer is there's a lot of just hustle, and everyone has a different route in. But you know, letting people know that you want to angel invest, that you want to see more deals yourself, or you know, you want to learn the ropes. You know, a lot of times you can write a 10K check, or you can write a $1,000 check if you're part of a syndicate. And so starting to just see that deal flow. I could go on, but there are lots of different paths for sure. Is there room for more companies in the online reselling space? So the online reselling space, ThreadUp being a good example of a company that is taking used clothing and putting it online. An interesting operation. I went and visited their warehouses when I was up in the Bay Area. I think it's a generic answer, but if you're deep in a space and you know what is missing, or you have a vision, then I think there is space. And I am not in the online reselling space, so I don't know where the white space is, but I do firmly believe that entrepreneurs who are deep in a space will know, you know, I don't think it's ever a good model to just say, I want to do exactly what someone else is doing. But if you're in the space and see the opportunity, I absolutely think there is opportunity in most areas right now. Oh, this is the same sort of question. So maybe I saw this question. I think online reselling, is there room for more companies? Yeah. I'm going to say I just answered that, or try to. What was my thought process on creating Shift? This is like the next 3 hours we could discuss this. So Shift, at its most basic level, my co-founder George had worked with me at Google, and essentially what he said was, this is a huge industry. It's $1 trillion industry, used cars in the US. It's huge. And it really isn't being done online. And it's a poor user experience. And, you know, that's probably all I heard. And I kind of got that. And that made sense to me. And so I angel invested. And I angel invested without really thinking more deeply about things. But then I was on maternity leave from Google, and I hadn't really studied entrepreneurship or thought I wanted to be an entrepreneur, but I got really hooked on sort of this, you know, I was just working with George. I was showing up at his apartment every day at 10 o'clock and, you know, just helping him get things going because I had angel invested. And things just had momentum. And I think sometimes when people are starting companies, you try things and see whether they have momentum. And a lot of things you try don't have momentum. And this one clearly did. Now, there are a lot of things I wish I had thought more about when starting Shift, but I think that's the case for most early stage companies. One thing we did was, I don't think we were extremely clear on like what is part of the vision and what isn't part of the vision, in terms of, you know, our vision was actually really broad. It was like, we want to bring test drives to your house. We don't want to be a dealer. We want to do things completely different in XYZ ways. And I actually think that you have to have a pretty broad vision, which is, you know, make the used car buying experience a better experience, and not over specify how you're going to achieve that, because along the path, the how evolves and changes as you learn more. So yeah, I could go on, and Shift just kind of got a life of its own. And then I found it way more exciting, and just was learning so much more being at a startup than I was sort of being one of 1,000 product managers at Google at the time.
So Minnie, we have a few questions coming in from chat. We've got Dan who's asking, what's the number one or two most important elements you look at when investing in a company?
I mean, traditionally, you'd always say it's team, product, market. But, within that, and so team is a very cliched, true statement. But within that, like, the thing that I care about is I want it to be authentic, and I want it to be someone who really knows what they're talking about. And so, someone who comes to me and like, I went to the business school course on startups, and it says I have to have a Tam, Tom, Sam slide. And like, they have this because it's like, you believe that you try to reverse engineer what the VC wants, and what what every, MBA course tells you. And I'm not ripping on MBAs, I also have one. But it's actually, what I'm looking for is someone who authentically comes to me and says, I have a vision. I understand something so well, and I know what needs to be built here. And I want them to look me in the eye and convince me that not only do they have the vision, but it's a big vision. And not that it's because they did, some spreadsheets to work to, reverse engineer into some $1 billion, $1 trillion numbers, but sort of the look in the eye and be convincing. Is, I guess, what I'm looking for. And, because we're doing mostly fairly technical investments in B2B technical investments, my ideal thing is often someone who has that vision, who comes from the space and understands the logistics, the trucking logistics market super well, combined with a technologist or someone who understands where the moat is going to be and can actually build the thing so that it's not just a vision without the ability to execute on that vision.
Good key point too. Execution is hard. So we have another person. Yeah, exactly. So we have another person asking, what is the best way to get a lead for your seed round when you have several VCs interested?
Oh, that's a good question. And I think that they're kind of saying, essentially, there's a lot of times where companies have a lot of interest, but they don't yet have a lead, meaning someone who's willing to price the round usually, and sort of write usually the largest check, although not always. We lead a lot of rounds where we are not the largest check. It's unfortunately, it's still not easy. So everyone says, oh, there's so much money in venture. And still there aren't that many people who lead rounds. Sometimes it's a numbers game, right? And it's just realizing how much time it takes to raise, and being willing to just put the time in, because if you drag it out, you can get stale essentially in your fundraising. And so just putting all in and just having all of those conversations. So having the people who, who are committed, the angels, let's say, who are putting in, 50K, 100K, 200K, having them make introductions to everyone, looking people up on LinkedIn. Like, I've now done whatever, like 80 podcast episodes who are just LA investors, and just finding the 1 degree away connection to them, who's willing to make the introduction, that sort of thing. So, yeah, I wouldn't say it's easy.
So Jeff, who just commented the lead is the toughest one to get, he says, I co-founded a startup that's building a physical product. And while I've connected to a lot of VCs that invest in consumer, most are focused on SaaS or other software companies. Any advice on who to target for this? And he said, we solved keeping coffee hot in our tech connected sleeves.
So let's see. I mean, I think the answer is some people, it is a understanding what VCs like, and some VCs don't like hardware at all, right? Like Calibrate here in Pasadena, if I'm not mistaken, they do like a large percent of their portfolio is hardware. So just understanding who are the people who will like what you are building. Who else is like a hardware, without quite knowing the product, or, it's a little harder, like Embark likes hardware, but it's like robotics type hardware usually. You know, I'm gonna redo my website so that all my guests, you can filter on them and be like, who likes hardware, who does seed stage, but keep asking those questions. And the other thing is, this is an AMA, which I find a little funny, because in truth, you can AMA me anything, anytime. So Beth, feel free to like share my contact info, or people can hit me up on LinkedIn, and I will try to be helpful when I know the answer.
Great, thank you. And you'll have to share your website too, so people can keep checking back for that fun filtering function. So Matt says, hey, Minnie, curious to hear if burnout has been a struggle you've had to overcome as a founder or now as a partner. If not, what's helped you create that work-life balance and avoid it?
Yeah, I mean, everyone's wired differently, right? And so I actually like being ridiculously busy because I get into trouble if I'm not. But I think I have had burnout. Actually, for me was, and I think it's true of a lot of people, that sometimes burnout comes not just from working hard, but working hard and getting nowhere. I mean, the worst burnout for me was actually, there were a couple of times where we worked extremely hard, or we worked reasonably hard at Google, and then like the project was canceled or it never launched. And actually that was the worst burnout for me, was working on something for a year without seeing results, versus I can work kind of 7 days a week. I also have 3 kids, which keeps me honest about that. But I can work a lot if I feel like I'm in the flow or something, right? Like if I feel like I'm launching a ton of stuff. But I mean, I've had all sorts of struggles, whether it's burnout, or just, you know, frustration with the people I'm working with or other things. And I'm mostly a talker, and it helps me take the edge off things when I can talk to, like, ending up using my board really well, ended up being a real game changer for me. When I was at Shift, like I'm a really operational person, and I like to think about what do we need to do this week, and actually using my board to talk about things, whether it was burnout, whatever was the most, we talked a lot about burnout type things at the board level, just like putting that on the agenda for, you know, a discussion we're going to have in 3 months allowed me to treat it kind of like an operational task, and sort of solve it, dig into what are the root causes, like who's experiencing this. But yeah, I mean, I just go to the beach every weekend and go surfing with my children, so that helps too.
The advantage of Southern California.
Yeah.
So Dorothy asks, tell us more about the SoCal brand you're building that doesn't follow the Bay Area trends.
It's a good question, because I sort of alluded to it. I'm not sure. I think it's this a little bit, which is, if you're not deliberate about building your brand, I kind of see cities and ecosystems a little like companies, which is their brand is shaped by the early people in the community. And I think if you're not deliberate, then your brand gets defined for you. And, you know, I've had a couple guests who've talked about this, and I don't think we want to be the Bay Area. We have the opportunity of being something different. I think there was some discussion, there's always some discussion about like Silicon Beach is probably not the brand that everyone's aiming for. I think it sounds sort of light and I don't know, it doesn't quite do LA justice, I think, in terms of, one, being inclusive, two, you know, Pasadena ecosystem, for example, is, you know, has a lot of hard tech, I would say. And that's really exciting. And so, you know, I think we've got right now this very different feel to things than the Bay Area does, which is, you know, the bus stop I took to get to Google from my house in San Francisco, where I'd lived for 15 years, had "Go Home Googlers" spray painted on the sidewalk, and I had to stand there every day and catch the bus and go to Google. And it was a real, it didn't feel like a societal structure that was working for all. Like it wasn't an integrated experience where people were kind of all, and so I just think we have that opportunity. And I think there's leadership there. I know like Andy Wilson from the Alliance for Southern California Innovation here in Pasadena has been doing some, you know, pulling together some tech leadership on how do we intentionally brand ourselves. So hopefully it's an inclusive sort of community brand that that we can be intentional about thinking about.
Great. And I'm excited to see what shakes out from some of that work too. So I like this question. Are you getting good deal flow meeting founders only over Zoom versus face-to-face?
Yeah, Zoom is interesting. Yeah, we mostly are getting good deal flow. There's puts and takes of things I like and things I don't like. So for me, raising our Series A in particular at Shift was really intimidating in a, it shouldn't have been probably, and yet you're on someone else's home turf. Like when you walk into Sequoia and the offices are all done up and there's 15, 20 partners in their Monday partner meeting, you can't help, at least I couldn't help but feel like a rube, like showing up, wow, what do I know here? And it's something very different about Zoom. Like everyone's sitting like in their pajamas, fundamentally in their like, spare bedroom or whatever, I'm in my laundry room, whatever. And it's something very like leveling about that I find interesting. Sorry, but the question was, am I getting good deal flow? Yes, I think it's easier to take a quick 30-minute meeting. So I think that's on the plus side. On the negative side, there's even less serendipity. So there's a lot more of the who do I know, who's making the introduction, because you don't just bump into people who you find super interesting at the conference or whatever. And so there's a little bit that I worry that there's a little bit more of the insider baseball of, hey, here's my good seed company. Do you want to lead the Series A? Yeah, that's kind of how I'm seeing it. I still would like to see more deal flow, actually.
Never enough, right?
And the other thing, to go back to the other question, the deal flow, like I think one of the great things about the LA investors is I think they're very biased towards local deals. And like, I'm way more, and I have this thing for Pasadena too. Like this is I'm in the house I grew up in, this is my community. And so like, yeah, people write to me and are like, I'm in Pasadena. It's way more exciting to me than I'm a random company in the Bay Area, because my first thought is, oh, you're in the Bay Area. Well, did everyone in the Bay Area? Like, why are you coming to me? Kind of. So hopefully we can find ways of doing more stuff like this to really bolster each other.
And there's something to be said for that local connection, for sure, even if it's virtual. So we have another question here asking, how important is having a following on social media for a brand or founders for you as an investor?
It all really depends. Like, I think that you need to, again, be able to articulate your story of how is this going to scale? Why is this a huge opportunity? And some people scale because their brand has a community and a depth of following, but some people are in a different stage and it's like, oh my gosh, look at the crazy engagement that you're getting. I forget, there's something famous that I can't remember, but it's like your 100 rabid users or your 1,000 rabid users. Because to me, like if you can tell me you've got 100 really passionate, really engaged users, and you haven't spent any money on marketing, well, I can then, I can hear that story of if you poured marketing dollars into this, it could scale really well. And that might be more compelling to me than I've spent marketing dollars or I have, already invested in the content to have tens of thousands, hundreds of thousands, millions of followers, but, they're not as attached to this thing if it went away.
So I know we're 2 minutes over here, but we do have a couple more, it looks like a few more questions coming in. Do you have time? Do you need to, we want to be respectful of your time.
I guess there's no way for other people to be on stage, like, because if people ask, but I guess not. No, sure, you can filter your questions. That's totally works.
All right, stop me when you need to escape the laundry room.
No, I spend all day here. It's fine.
Oh.
Well, used to it.
Good hideaway. So Dan asks, do you have any knowledge in the location-based entertainment space? And if so, how do you see it as an investment opportunity in the coming year? And I admit, I had to look up location-based entertainment because I didn't really know what that was referring to. And so it's more like, real life shared experiences like arcades and water parks and family entertainment centers. And I've seen, now I'm remembering, reading about this previously, speculation that maybe this is the future for malls that are kind of going under, or maybe in the future VR is going to be prevalent in location-based entertainment. So I'm curious,
Yeah, I don't have a lot of, okay, so location-based entertainment is like Top Golf. I see, and I've opened up the chat. I found where all these questions. I don't have a great, I don't have a great insight on what's coming there. I just, it's sort of a, what do people still want to connect over? What, how are we going to change? Like, I still think people are going to want to connect over food, over entertainment. We're still going to have that desire. So it probably will still make sense, and there'll probably be some real estate available from all the people not going back to work, right?
Yeah. And I'm sure all the malls, all of the large spaces are going to want to figure out how to answer this question too.
Yeah, I mean, it's also interesting, just sort of the short-term pop-up nature of stuff, which I think is going to be interesting, which is you're going to be able to test things. And hopefully these long-term leases are going to go away more, and you're going to be able to have pop-up shops where you can prove that there's demand for things. So yeah.
So we have a couple more questions. Maybe we could take two more if that's okay with you.
Yep.
So we've got a question, speaking of, location and Pasadena and things like that. How do you feel about New York investments?
Generally, we will make New York investments, sure. 10-1-10, we'll invest anywhere. We'll invest internationally. I think that, I think it's a great thing that the company's getting born outside of the Bay Area. I think it's a great thing on multiple levels. I think it's been a real problem, and there's been a lot of like tech backlash. Some of it is because, in Congress, you've got people representing, the entire country, and they don't have tech in their country. And so they aren't, it's only the benefits have only sort of been very centralized in the Bay Area. And I don't think that's a good thing. And I think nowadays there's no reason for that, because, it was more of a black box where you had to go rub elbows with the other, VCs and angels and founders in the Bay Area. And you don't need to do that anymore. You actually can learn all you need to learn by watching courses. Like, there's just so much content. In fact, there's too much content, but there's so much content. So anyways, I think New York's a great ecosystem, and probably sort of ahead of Southern California right now, but no, yeah. Okay.
I'm kidding. Yeah. But we're all for Pasadena here.
Yeah, I totally agree. I like South Pass and San Marino too. La Cañada is great.
So you brought up some interesting numbers early on during your introduction about, size of investments that you're seeing. And I think this question, definitely dovetails with that information. So Dan is asking, in an early stage company that's looking for 5 million, what's the best route? Angels, VCs, something else?
5 million is kind of an oddish spot. To me, usually, like I said in these really high numbers that I was quoting, which were the Wing VC numbers, a company had usually raised like 5 million before Series A, but that's usually over like 2 or 3 rounds of, a $1 million or, $700K sort of friends and family from angels. If you're raising 5 million, it's not anymore from angels. Angels to me usually mean someone who's, the definition of angel versus VC. Angel is investing their own money, as opposed to sort of on behalf of, their LPs that they've raised money from, their limited partners. That's VC. And so usually the angels are writing, 50K, 25 to, 20 to 100K at the large end. So if you're raising 5 million, you're looking for a lead who's a VC. And, usually you're not going out of the gate raising 5 million. Most companies in sort of the world that I'm playing in, so I'm not talking about like biotech and other places, but usually are raising, a first round of $1 million, a second round of 2 million, and maybe another round of another 2 million. And sometimes they're raising price rounds, and sometimes they're, raising notes or safes. But, it's that combination of those 3 rounds that then lead to a Series A, and a Series A could be a $5 million round. But, for a Series A nowadays, you're expected to have legit revenues, paying customers, and some growth momentum, that sort of thing.
Makes sense. And let's see, we had another question. What's the best way to ask for an introduction to other VCs?
Yeah, I mean, it's still so much easier to have someone I sort of know. So like, as I said, I keep doing Pasadena stuff, and I've only been here, I was here for 9 months before like COVID hit, and then I've been in lockdown. So like my high school friends keep being like, hey, Minnie, like, I know we didn't know each other all that well, but my friend is starting a company. And, just even having that 1 degree away, even if it's not like, someone who's necessarily in the space or that sort of thing, is still really helpful, as finding sort of a connection. It's also like, it's actually, I get bombarded on LinkedIn, but a lot of it is just like, hey, I'm building I'm building a biotech company, a cannabis company, a consumer brand, and that's not what we do. And so there's also just like the people who take the time to be like, I know something about, I'm building a marketplace. You built a marketplace. So people who write well thought emails still stand out, I guess is what I'm saying. Like there's a real difference between someone who sent 100 emails to 100 VCs, and it's the same email that just says, I'm building an X. Do you want to invest? I just delete those, versus this is exactly what you're interested in. And I know something about why I think you'd be interested.
So in other words, do a little homework.
Yeah.
Great. Well, I really appreciate all of the time that you've taken to answer all of our questions today. How can people check out your podcast, and how can they get more info about you from your website, and keep an eye out for that filter?
Yeah. So, I mean, the podcast is LA Venture. And the reason I do it is for this reason, which is it's kind of hard to know what VCs invest in. And I found it hard to know, like you go to someone's website, it doesn't really tell you what size check they write. It doesn't really tell you what they're all about. And so I tried to sort of pin people down a little bit on like who they are and what they like to invest in. But then, Minnie@10110.net is my email address, my LinkedIn. There aren't that many Minnie Ingersoll, so it's like reasonably easy.
Great. Well, thank you so much for joining us. We're really grateful to have you be a part of Innovate Pasadena. And I didn't mention this up front, but Minnie is also a board member for Innovate Pasadena. And, it's always a pleasure for us to connect with other innovators in the community who really, really support the greater Pasadena ecosystem. So COVID or not, we're really excited to be able to continually connect with our community and build those stronger ties. And it's thanks to people like you that we keep on doing that.
I really appreciate Innovate Pasadena. Thanks, Beth.
All right. Well, thank you so much for joining us. And we will wrap up today. We thank all of our attendees for asking all the questions. And we also do make these sessions available on YouTube. So if you missed something, if you had to jump in and out, check out Innovate Pasadena on YouTube, where we'll post all of the Ask Me Anything sessions in the future. So thanks, Minnie.
Thanks.